This morning, my portfolio was up $1,577 in a single day. On a screenshot, that looks incredible. The kind of thing people use to sell you a course or a get-rich-quick dream. But I'm going to do what almost no finance channel does. Tell you the honest truth about what that number really means. What actually made that $1,500 day possible? It wasn't luck, and it wasn't a hot tip. And by the end, you'll see why that single green day is the least important part of the whole story. This morning, I opened my portfolio, and it was up $1,577 in a single day. On a screenshot, that looks incredible. But I'm going to do something almost no finance channel does. I'm going to tell you the honest truth about what that number really means. My name is Sargon. This is Strategy State. Because a green day like this is exactly the kind of thing people screenshot to sell you a course, a signal group, a get-rich-quick dream. And almost all of it is a lie built on one very misleading number. So here's the question I want you to hold on to. What actually made that $1,500 day possible? Because it wasn't luck, and it wasn't a hot tip. The real answer is hiding in plain sight, and by the end of this video, you'll see exactly why that single green day is the least important part of the whole story. Let's start with the number itself. That portfolio is worth about $28,700, and it went up 5.8% in one day. Sounds amazing, until you realize the ugly other half of that coin. The exact same market that gave me plus $1,500 today can take away $1,500 tomorrow, just as fast. A 5% swing up is also a 5% swing down. If I made a video every green day and hid every red one, I'd be lying to you by leaving half the story out. That single day tells you almost nothing. This is the word that changes everything, and almost no beginner truly gets it. Volatility. The market doesn't move in a straight line. It jumps around violently day to day, and the bigger your portfolio grows, the bigger those daily swings look in raw dollars. Think about it. On $28,000, a normal 2% move is almost $600 in a day. A wild day like today is over $1,500. Those numbers feel huge, but as a percentage, they're just a Tuesday. The dollar amount is designed to trigger you. The percentage tells the truth. Now let's actually open the portfolio, because what's inside matters far more than any one day. 4 names you'd recognize instantly: Apple, Tesla, Nvidia, and one that isn't a company at all: VOO. The first 3 are individual stocks, exciting, famous, and volatile. When Nvidia rips higher on AI news, days like today happen. But individual stocks are also how people get hurt. Any single one can crash on a bad earnings report. That's the risky, thrilling part of the portfolio. But the quiet hero is that 4th one, VOO. It's not a stock. It's an index fund that holds 500 of America's biggest companies in a single package. Over the past year, it returned around 22%, including dividends. And it does it without betting everything on one name. So this portfolio is really a mix of 2 philosophies. The individual stocks are the gas pedal: high risk, high excitement, big swings. The index fund is the engine block: boring, diversified, steady growth underneath it all. And that boring part is quietly doing most of the real work over time. And here's proof this isn't just theory. Earlier in 2026, when conflict in the Middle East spiked oil prices, the whole market dropped around 9% in weeks. Every portfolio like this one bled red. And then, it clawed its way back to record highs. Same pattern as every crisis before it. If you'd panicked and sold during that dip, you'd have locked in a real loss and missed the entire recovery. The people who did nothing, who just held, watched their accounts heal and climb higher. That's the whole game in one example. But here's the part the screenshot hides completely. A $28,000 portfolio did not appear overnight, and it did not come from one lucky trade. It was built the slow, unglamorous way. Do the real math. To reach almost $29,000, you might invest around $300 a month for 6 years at normal market returns, or $500 a month for 4 years. It's not a jackpot. It's a paycheck decision, repeated over and over, while the market compounds quietly in the background. That's the invisible foundation under every impressive green day. Months and years of boring, automatic deposits that nobody screenshots, because consistency doesn't make an exciting thumbnail. But it's the only thing that actually built the portfolio. And there's a quieter kind of return most people miss entirely. Some of these holdings pay dividends, money that lands in your account just for owning them. VOO alone pays a bit over 1% a year. On this portfolio, that's a few $100s a year showing up without a single trade. And if you flip on automatic reinvesting, DRIP, those dividends buy more shares, which pay more dividends, which buy even more. It's a slow snowball, but it's the kind of return that keeps working while you sleep. No screen watching required. Now let me save you from the traps that a green day like this actually encourages. Trap 1. Seeing my screenshot and dumping your savings into Nvidia at the top, hoping for the same day. That's not investing. That's chasing, and it usually ends in red. Trap 2 is the opposite and just as deadly. Checking your portfolio every single day. On a big red day, that panic is what makes people sell at the exact bottom, locking in a real loss because of a temporary dip. The daily number is noise. Your job is to ignore it. The uncomfortable truth is that the investor who checks once a month, stays calm, and keeps buying almost always beats the one who watches every tick and reacts. Doing less is the skill. The green days and red days average out, and over years, the market has always trended up through every crash. There's an old line the pros repeat. It's not about timing the market, it's about time in the market. Nobody can predict the green days. But if you're simply there for all of them, holding through the red ones, the math quietly works in your favor. And that patience isn't just about surviving the red days, it's where the real money quietly gets made. Let me show you a number that should matter to you 1,000 times more than today's screenshot. So forget today's 1,500. Here's the number that should actually excite you. That same 28,000 left alone at historical market returns could grow to around 160,000 in 20 years, and past 380,000 in 30. That's the whole point. Not the single day that makes a flashy screenshot, but the decades of quiet compounding that turn a modest monthly habit into real wealth. The $1,500 day is a firework. The 30-year chart is the actual fortune. So why do people fall for the screenshot every time? Because a slow 30-year chart is boring, and a plus 1,500 day is a dopamine hit. The whole social media money world is built to sell you the firework and hide the boring habit that actually works. The person with the real portfolio isn't smarter or luckier than you. They just started, automated their deposits, diversified, and had the discipline to ignore the noise, the green days and the red ones alike. That's the entire edge, and it's completely boring, and it's completely available to you. So let's finally answer what actually made that $1,500 day possible. Because it was never about today at all. The plus 1,500 wasn't created today. It was created by every boring deposit made years ago, sitting in the market long enough to grow this big. A 1% move only becomes $1,500 because someone patiently built a $28,000 base first. The day was just the market breathing. The years before, it were the real work. That's the secret hiding in plain sight. Nobody can hand you a plus 1,500 day, but anyone can start building the base that makes those days possible, one boring automatic deposit at a time. So here's the honest takeaway. A plus $1,500 day is real. But it's a side effect, not a strategy. The strategy is boring. Invest consistently, diversify, reinvest, and leave it alone for years. Do that, and one day you'll get your own green screenshot, except you'll actually understand why you earned it. The people posting green days want you to feel behind. Don't. Every one of them started with an empty account and a first deposit, exactly where you are right now. So don't chase my green day. Go build the base that creates your own. Start small, automate it, and let the boring magic compound. And hey, next time my portfolio has a big red day, I promise I'll show you that screenshot too, because honesty is the whole point here. A quick like and subscribe keeps Strategy State real, and I'm Sargon. Go plant your base, and I'll see you in the next one.